Good morning traders, and welcome to this Orbex market analysis update where we will be looking at the metals and energies markets focusing on gold and oil. Now, there's been plenty of volatility in both these markets recently due to global developments which have been driving price action. Firstly, in terms of gold, the two key drivers then have been USD and risk flows. So with the US dollar strengthening again over recent weeks in light of better US data, gold prices have been hit hard. Traders are now of course waiting for the May FOMC meeting due later today, following the last meeting which saw the prospect of further Fed rate hikes later in the year being mentioned again. So traders will be keen to see if this is the case once again in light of better data recently. Now, in terms of risk flows, optimism around a potential US-China trade deal, which could be coming in the next few weeks, has kept risk appetite well supported, meaning that gold has not seen the safe haven demand that we saw last year. Alongside the prospect of a US-China trade deal, recent commentary about a potential US-Japanese trade deal has also boosted risk appetite, which continues to keep gold prices weighted to the downside. Oil prices have had an interesting time recently also. The OPEC production cuts, which began in January this year, have helped underpin the market and keep prices supported despite rising US crude production, which is currently at record highs. The group is also expected to announce an extension to these cuts when it meets for its next meeting in Vienna in June. However, last week oil prices were hit hard in response to news that President Trump had contacted OPEC asking the group to step up its production in a bid to lower oil prices. Now, while the group is unlikely to bow to President Trump's demands, the news was enough to fuel a profit-taking sell-off. Looking ahead today then, traders are waiting on the release of the weekly EIA report following yesterday's API report, which showed an unexpected build in crude inventories. And if this is the case and it confirms a further build, then we can expect some further weakening in oil prices. Okay, so let's take a look at some technical levels then, and please remember that opinions shared here do not constitute investment recommendations, and when trading, losses can exceed profits. So starting with gold on the daily time frame then, and you can see the big thing to note is this battle that's taking place here around the 1280.58 level. So this has been a key support level over the year so far. You can see we've tested it several times. We recently broke down through the level only to then recover, pop back above, retrace, and you can see now that we're sitting right on that level. So this is a key pivot for gold, and you can see that while we're currently here within this bearish channel from the yearly highs, focus is on a further move to the downside, unless of course we can get a pop back above the bearish channel resistance line and also this local structural high at the 1298.32 level. So only back above that level will that mitigate the near-term bearish bias. If we drop down then to the H4 charts, and you can see just how laboured this current recovering gold price is. So you can see we're making very choppy, shallow moves. And if we go ahead and map that last corrective rally here, you can see that a move of a similar scale this time around would take us up into that resistance zone around the 1298.32 level. So if we do recover up to that zone, this could be a point where we see a lot of selling, as we'll have confluence between this corrective symmetry move, the local structural resistance, as well as the bearish channel high. So those are the levels that I'm looking at in gold then, and again, if we break down below the 1280.58 level, the first support level to watch will be the 1266.54 level, which was the low made when price broke down below the 1280.58 support last week. Okay, moving over to the oil charts then, and you can see we're in an interesting region with oil also, because the rally this year, which has been an incredibly strong rally, you can see we've moved up from the early 40s up to the mid 60s, so a plus $20 rally in oil. We've broken through many key technical levels on the way up. We recently broke above the 64.38 level, traded up to highs of early 66 before reversing lower to retest the bullish trend line from the yearly from last year's lows. So that's where we're at currently. We're sitting on that trend line, and while we remain below the 64.38 level, we are likely to see a further route down towards support at the 61.89 level. So if we drop down onto the H4 charts then, and you can see just how severe that sell-off was last week in response to Trump's comments. For now though, the recovery that we've seen taking us back up to 64.38 has stalled, so we're sitting above last week's lows. So while they remain in place, we are likely to see this range trade continue. However, like I say, we have got the EIA report later today. We've also got the FOMC, so if we see any dollar strengthening or a report of a further build in crude inventories, then we are likely to see those weekly lows being taken, and this will of course put focus on a move down to 61.89 next, and then deeper support down at the 60.41 level. Okay traders, so those are the levels I'm looking at in gold and oil for today and the rest of the week. As I say, the EIA report due later this afternoon, European afternoon, and the FOMC due later this evening. So make sure to stay tuned into the blog over the rest of the week, and we'll keep you updated on any pertinent price movements and developments, doing our best as always to serve traders responsibly. Okay, have a great day everyone. Thank you.